And we're actually getting some of the big tech companies all reporting on the same day, including Apple, Amazon, Alphabet, Qualcomm. But I'm not going to talk about those stocks today because there's a group of other stocks that are actually hitting 52-week highs or right about a 52-week high heading into their earnings reports this week. Yes, there's some that have been rallying that much off the lows that they're now at these new highs. So it's a critical juncture, and then they're going to report the earnings. So what do their earnings charts look like? Do they have good track records in order to get maybe a catalyst going into this earnings report to boost the stock even more? Let's see, what are the 5 companies that I've picked out that are at those 52-week highs, and what do their charts look like? So the first company is Meritage Homes, ticker MTH. I'm probably saying that wrong. It could be Meritage, but I like the French pronunciation better, so I'm going with it, Meritage. And you can see this is one of those companies that has a great earnings surprise track record. Just that one miss back in 2018. It didn't even miss at the start of the pandemic there in 2020. They had some big beats then in 2020. And this is a home builder, and we all kind of know what's going on with them. Sales are down, orders are down, but costs are starting to come down. The margins have been holding up pretty well. So these stocks all have caught a bid there in 2022 after hitting those kind of lows there. You can see in October, they've been surging. Over the last year, these shares are now up 6%. It might not sound that great, but the S&P 500 is still down 8% during that time period. And it's a home builder. They're supposed to be, doomed given the high mortgage rates and what's happening with sales. But the street doesn't think so. It's pricing in a bottom here. Will it be true? Now, Meritage is one of the cheapest stocks I'm going to cover today on a PE basis. It's still only trading at 8.8 times even after this big rally. But I'm still expecting those earnings estimates to be cut further as sales still continue to slow. We don't know what's going to happen in the spring buying season that's about to hit in the next couple of weeks. So there's a lot of home builders reporting this week. This is one of them. But be sure to tune in on, one or more of them to see what are the market conditions really like, what's happening with the costs. Lumber prices are starting to tick up again. Copper as well. Those are some big components in the home. So this is going to be a key area. Meritage Homes right now at the 52-week high. Can it bust out and get to those 2021 highs? We'll see. Then another one on the list that I was surprised because I haven't tuned in recently is Ferrari, ticker RACE. You can see it has 3 misses with that one just off the chart there in 2018. But otherwise, this is an excellent track record as well. So we also have an earnings all-star here hitting the 52-week high. You can see those shares now up 9.2% over the last year. And again, the S&P 500 is actually down 8. So autos back in favor here. Can this one bust out to the 2021 highs on this earnings report? I don't know. We're going to see. It's not cheap. It's not a Meritage. It's now trading at 43 times. Are we back to this again where the growth stocks are expensive and people are willing to pay 40, 50, 60 times for the earnings for some of these stocks? We don't know, but we're going to find out possibly this week. Then we're going to switch it over to the beauty side. A lot of these stocks have been hot, but e.l.f. Beauty trading at a new 5-year high, as you can see. And this has been one of the hottest stocks since before the October lows. It made that low there earlier in 2022, as you can see. It's posted a bunch of big beats in a row, has a great earnings surprise track record, just that one miss back there in 2021. Over the last year, these shares are up 106%. So what do valuations look like? Who's buying in at these highs? It's trading at 50 times earnings. So obviously not cheap, but the street willing to pay that high valuation for the beauty side of things. This is one of the few that's reporting this week. We're also going to get Estee Lauder, ticker E.l.f. That stock has also been on a tear, and that stock is also trading over 40 times forward earnings. So how much longer will this beauty rally last? We're going to see. Then we're going to switch over to the restaurant side with Starbucks. It too has a good earnings surprise track record. Just the two misses in the last 5 years, and they both were in 2022 there. But it's back on track with these misses, or with these beats or meets the last 2 quarters, and the shares have been rallying on really strong comparable sales. So they've been crushing it again in North America. The big worry was China with the zero COVID, with double-digit comparable declines going on in China. But China has now reopened. It's gotten rid of zero COVID. It's ditched it. So what's that going to do? It's still in the early innings of the reopening. So it may not impact this last quarter as much as we might think, but the street is buying into that good times are, here again, basically, with one of their second biggest market in the world, China, reopening. So Starbucks, year to date, up now about 12%. But again, that's beating the S&P 500, down 8%. Not quite at those 2021 all-time highs yet, but trying to get there. Does pay a dividend, yielding 1.9%. It's the only stock I'm bringing you today that pays the dividend. What does the PE look like? Yes, it's expensive. PE of 32. So you are paying the price if you want to get in at Starbucks right here. I do own it in my own personal portfolio, and I've owned it many years, going back to like 2014, 2015. So I'm a long-term shareholder, but I'm not adding to my position at 32 times here, but we'll see what happens. Will China provide the catalyst? I'm thinking it will, or the street is thinking it will, and it's already priced it in. And then we're going to wrap it up with another red hot stock. See, what did I tell you? There are a lot of big winners right now. Deckers Outdoor, ticker DECK. We've talked about it in the past because it too is an earnings all-star. You can see with just that one miss there in 2021, it's got the perfect record other than that one miss. And these shares too, like e.l.f. Beauty, sold off big at the early into 2022 and then have been rallying ever since. So didn't really see October lows there, no chance to get in there, and then it's taken off. They're trying to test those all-time highs here. A really good report could test it. Now, on the last earnings report, it did have, the inventory problem that a lot of the retailers are having. Deckers Outdoor is UGG and Hoka 1-1. It's two big brands, but we did have the holiday season. How good was it? Were they promotional? Did they have to, cut the price on a lot of products to get rid of it? They did say that they did have the excess product going into the holiday season. So, and they lowered guidance a bit last quarter. So we'll see. Maybe it wasn't that bad. The street is thinking it wasn't. PE of 23.5 on this one. Again, no dividend. Shares are up 40% on the year now, with the S&P 500 down 8. It's not as expensive as a few of the others I've talked about today, but still at 23 times, I'm still on the sidelines because it's just a little pricey for me. I was considering buying it back there at those lows in 2022, but I thought it might go lower still, and I did get greedy, and now it has not retested it. So is this a sure thing breakout with Deckers? Is it going to the new highs and then going to keep racing on from here? I don't know, but we're about to find out. So despite all the doom and gloom out there, we are getting a rally here in January in stocks, and a lot more stocks are rallying into these 52-week highs than you might think. Now, again, some of them are not at all-time highs, just the 52-week. So it's, maybe not as bullish as you might think, but these 5 charts, very bullish. And there were even more than just these 5 that I could have picked out for just this week. So things are heating up out there. Can they hold these gains? Will we see some new all-time highs on some of these big popular growth stocks? These are all questions that are going to be answered this week. So you don't want to miss a single All-Stars video because I'm bringing you all the charts like these charts all throughout earnings season. And these not only are, near breakouts, but are also very good earnings surprise winners with the great track records. Who would have thought, right? That you would have both on the same chart. Yes, I'm being sarcastic. So be sure to subscribe so that you can see what stocks and what companies have these great track records. It can tell you a lot about what's going on with the stock. And it's a great tool to use. So you can find them all on Zacks.com. You can find the videos on Zacks.com/YouTube. That's our YouTube channel. Be sure to get them somewhere. I'll also be tweeting out even more charts because this is a big, busy week. I'll be tweeting out all the Amazons and Apple charts as well. So follow me on Twitter, just at my name, at Tracy Reinick. It's Tracey. Last name is Ryniec. But be sure to get us somewhere, and I'll see you again next time with some more earnings charts.